Hello, everyone, and welcome to another episode of the Fincrest podcast. Today, I have with me Mr. Alexander Evans, who is a leading expert in the blockchain space and is currently serving as Tier 1 blockchain advisor and crypto author. He has a wealth of experience working with companies like Devers and World Business Union, where he is the president of the Blockchain and Cybernetic Commission. Additionally, he has been serving as a mentor at Techstars and a former international sales director at Kaizen Finance. He has contributed significantly to the growth of the crypto industry, and I'm really excited to have him here. So let's welcome Mr. Alexander. So yeah, welcome Alex. How are you? How are you doing today? And I'm really excited to host you on the podcast.
Very good indeed, Ashmeet. Thank you. How about yourself?
Yeah, I'm doing great, man. And like, thank you so much for coming up on the podcast and agreeing to do it. So yeah, I'm really thankful to you. And like,
Sure thing. And it's great to be here. Hello to everybody who's watching this. Absolute pleasure.
yeah. So yeah, like I'll just try jump onto the questions that I have for you, and more or less of them are somehow related to the book you wrote recently, and more of on the token side of the crypto. So my first question to you is like, what is a token? Like, if you can break it down for very general audience, like the people who are very new to the crypto space. So that would be really great.
Sure thing. And I think that's a great way to kick off the actual conversation here. In short, a token, it's an SPV, the way I view it, so it's a special purpose vehicle. It's an envelope of digital data, we'll put it that way. Okay? It's an envelope. And what this envelope represents, that's where the value comes from. So people are creating or generating tokens left, right, and center on different blockchains. Of course, tokens in the sense that we're talking about nourishment. Of course, it's about blockchain tokens, cryptographic tokens, however you want to phrase it. The interesting thing I would say is the use case. And again, many tokens actually go bust. So many projects go bust. I think it's about 70% of all crypto projects with tokens have actually gone bust since 2017, like 70%. It's huge. And in short, that means that the value those tokens are representing, it's more or less gone as well. The crazy thing in this industry, in my view, is that the token value from a financial perspective is so heavily intertwined and embedded within the project itself that even if the project actually has something great it's bringing to the table, it could be something quite interesting, revolutionary, it could be a new biodegradable compost or whatever that would be, whatever the actual business model is behind the token, depending on the actual performance of the token, that determines the success of the business as well. Even if they're completely separate from a value add perspective. A lot of people use tokens as means to raise funds or to create extra liquidity for the project, the business, the startup. Now, what the industry, and this is still to say on topic about what is a token, it's a means of raising funds as well. For literally 99% of all the projects out there, they have a token because they can enter the blockchain space and they can raise funds through it. Then it's all about what utility does that token have. Maybe 80-90% of the projects out there, they don't need to have a token to actually work and be a business. But they have one because it means they can participate in the ecosystem and they can raise funds. And I guess you could say as well, they can share some financial progress with the community that's been helping them. But seldom does that work because the majority of exit liquidity, it's the retail community. So it's a bit of a 50-50 kind of thing. And of course, if you get in early from a speculative perspective on a token, then logically, if it pumps, you should be able to make some money. And this is where the term sniping comes from. So as they launch it, maybe there's like a 10x, then you can get in quite early, buy and sell. Even 20 minutes later, you've already made a 10x in many cases, which is very fast money. And this as well is another reason why it's a highly volatile industry and why the token component itself is not necessarily intrinsic to blockchain, but I would say it's probably the best front person for blockchain because of the hype it drives around all the technology.
Absolutely right. So, like, while you mentioned, like, what I want to understand is when we talk about fundraising and when we talk about retail participants getting a share in the pie. So, can we compare the tokens to the real shares that or stocks that trade into the market? Like, if we talk about the current traditional financial markets that we have, there are like usually we have shares that represent the equity. And if I invest into that project, more or less, I am the owner of that project. But when we look at the similar thing in crypto, though I'm investing in the project through tokens, but I do not become the owner of that. And majority of the times, the project owners just dig those tokens and like take the money and run away. So can we compare it to like the normal traditional financial shares? And if we can, to what extent we can? And is there any better way to like create ownership for the users who are investing in crypto to have the actual ownership of the project rather than just some marketing gimmicks? Okay, if you can shed some light onto that.
Of course. I think in a very, very, very simplistic terms, you could compare it to, let's say that your grandmother, she has no clue what it is. I think it's a great way to kind of open the explanation on what the token is and how fundraising works kind of thing. But if it was really that, then how do meme coins work? You don't get equity. It's the complete opposite. There's no equity involved. There's not even a white paper. Never mind like a light paper, but there's nothing. It's simply an SPV, so a special purpose vehicle. And in my view, anyhow, there are many ways of fundraising. And tokens, going back to your initial question, there are three segments here. But the initial segment on can we compare it to the stock market where it's basically fractionalized ownership of the company? Some projects still have that model, where in essence, the token, it's just a means of fractionalizing the ownership of the company, of the company's progress, which you could compare to maybe dividends, where they would get financial benefits if the token performs well, if it's heavily and intrinsically tied to the performance of the company. But seldom is that the case. It can be in some particular ones, but it's just a bit of a fancy add-on to generate funds. But this is where it can work for everybody as well. And it definitely is something where it provides a lot of opportunity for people who wouldn't even be able to participate in the normal stock market. I mean, just setting up an account on those things, it's a bummer. It's really frustrating. And all you have to do here, you can just even hook up on a DEX. If you got some USDT, if you don't, just go on a centralized exchange or someone can send you some. And straight away, you can get heavily involved and you can trade whatever you want to trade. Special DEXs, so decentralized exchanges, in short, and then centralized exchanges for sexes. It's a very interesting way for anybody to get involved in anything financial. We'll put it that way. Very simplistic, very volatile at the same time. But who says high volatility? Says high potential profits as well. But it can go the other way also. So it is a little bit like, I don't like saying gambling because at the end of the day, there's much more to it. But it's definitely on the speculative side of things. Now, on the other component, fundraising in this industry, it's not necessarily just through tokens. And to piggyback on the initial question as well, people do raise through equity also. Before they alter token, people do raise rounds where they give out equity to big VCs, etc. Then they have a completely separate fundraising round through the token. And we've seen the new trend as well with nodes, which, if you think about it, I'm selling nodes on L3. It makes completely no sense. Because let's say you're on, I don't know, it's on Ethereum, which is an L1, then you got base in L2. Then someone's building an L3, they're going to do a node sale. In short, the nodes or the equivalent of nodes, they're already on the L1. So even the L2, it's powered by the underlining nodes. So why would you need nodes for L3? It's just an interesting way to generate finance or generate funds, generate money. So it's a very, very different domain than the traditional financial domain. And I don't know if you saw this morning as well, but even market makers like GotBit, all the other guys, they're kind of gone down. They got hit by the FBI, the Fed, all these things because of wash trading, all these different things where that happens and the Fed hits down much, much faster on such companies in the normal realm. But in Web3, for some reason, it takes a lot more time because it's much newer and they're still innovating. And I think the fundraising component is probably one of the main components of why people do have tokens, because it allows not only them to fundraise at, I would say, much easier paces, it allows them to be much more liquid as well, and it allows any single person around the world to have a shot at making some money, which is the main thing.
Right.
Got it.
So in a sense, we can say that token is a SPV, special purpose vehicles, right? Like, so is that what we can annotate tokens to?
You could say that. It's basically an envelope. Think of it this way. Another big difference between the traditional stock market and everything else, where, yeah, a stock, in short, it's a fractionalized share of ownership where it may or may not give out dividends on a monthly basis, but it still has that value, intrinsic value of an equity share of the company within it. A token, in short, think if we give you the keys to a completely virgin country with nobody there whatsoever. You've got the keys to this country, and you're the architect of the new monetary system. So the token, in short, that's your new money. But what do you value it on? What is backing that money, and how does the economy work? So behind each token, you've got it can either be complex or it can be quite simple, straightforward economics. That's where you go into tokenomics. But in short, it's a completely new way where any single person can actually redesign and create their own money in that sense, how they would like it to happen, what they would like to back it on. And the other big thing, I mean, that even Turkey, I think it's like 40 million people out of Turkey. I think there's about 80 million people in Turkey, if I'm not mistaken. Literally half the population that they talk and use crypto quite often. If you hop in a taxi over there, like it's just trying to give you financial advice, you know? It's very well set in stone in that country because high inflation, and at the end of the day, this is a super easy option. They don't need to have a trader, and it's not like back in the days with Wall Street where you'd have to have your own little kind of broker calling you do everything for you. You got Robinhood, different applications. I agree. However, it's still based in the normal real world where it makes sense if you're playing the long run. If you've got, let's say, 5, 10, 20 grand, 100 grand, you want to place in, you want something super sturdy in that sense. I'm not talking about micro trading here or hyper trading. I'm just talking about something for Mr. and Mrs. Smith, like something super easy. They can put in, they're like the SP 500 in the States that kind of grips everything up. They can just place it in stocks, in bonds, whatever they want, wait 10, 20 years, 30 years, 40 years, and then for the pension, it's kind of part of the 401k by themselves. So that makes sense. They'll maybe get like a 10x return, something like that, which it's pretty damn good. But in this industry, you can make a 10x in 10 minutes if you're in the right place at the right time. And the normal structural financial world cannot at all provide that. This hyper growth, the hyper returns, this is one of the best industries for that, and probably the best, I would argue. However, going back to the little point you brought up as well, the token itself, it's in short whatever the founder or creator of that token wants it to be. And this is where anybody who's thinking of maybe participating, I assume all the guys listening as well, it's not your first rodeo. But this is where you've got to be prepared to lose the money that you put in. I know a lot of people say it, but it is true. You're probably going to lose more than win more. And at the end of the day, if you do have, I would say you're a bit of an opportunistic mind, and you've got a little bit of knowledge on the industry, how everything works, just do a bit of research before. And the biggest thing for anybody who's thinking of investing, in my view, and this is not financial advice, by the way, I'll make it super clear, play out that disclaimer there, it would be to purely look at the roadmap of the token. And you can get lucky, where it could just be a meme coin that came out of nowhere, like Pepe coin, ridiculous FDV there. But the main thing is you want to try and be a little bit clever, a little bit ahead of the curve. So if ever you know what the roadmap is, let's say that they launch on a DEX, then on MEX Gate.io, but 5 months down the line, the plan's go on Binance. Logically, that should open the floodgates to more liquidity. So if you buy at that point, hold it, wait until they do hit that big thing. And there's always going to be delays, different things like that. And this where you got the hodlers, it's diamond hands, different things like that. But yeah, always look at the roadmap. And this is where the token itself, going back to your question, it depends on the roadmap as well, what they want to do, what the founders designing that token to do, the life it's creating for the token, and what's expected of the token in the future.
That's really interesting, to be honest, like, and really insightful for the people who actually want to invest into crypto, because this roadmap, it is really helpful for those who are actually navigating the methods or points where they can actually make money. So that's really great insight to have for people. And what I want to know more is, like you mentioned that anybody can launch a token and can start a token. So I want to know, like, if there are good projects with genuine utilities, why should one launch a token? Who should launch? And when should they launch a token? So if we can bring in more insight on those uh, who, why, and when of those tokens, that would be really great.
Really good, really great question again, Ashmeet. This may be a bit counterproductive, but I don't think anyone should launch a token unless they have a real reason, first of all. And that reason may be money. That's a valid reason as well. I mean, how many wars have been fought? How many millions of people have died since the start of time just for financial gain? So that's one hell of a reason. But you kind of need to make it, I would say, clear at that point that if you are doing a token, then yeah, it's for money. Sure thing. But don't cry it from the top of the roofs, of course. But if that's your goal, fair, nice, good on you. Now, secondly, I would also argue that if you are considering launching a token, I actually wrote the book, How to Launch a Token. So this is one hell of a question straight down my alley. Um, how to launch a token or why to launch a token. First of all, entrepreneurship, if you want to try do something cool as well, if you want to try get out of the 9 to 5, all these different things, it can be a door. It is possible. However, we're not like in 2021, 2017, all these different things, where fundraising is harder. VCs, they're much tougher, they're much more stringent as well. So if you, let's say back in 2021, you could raise money off a pitch deck. Today, you need to have a product, a pitch deck, a white paper. You need to have 2 million users already on the thing, to get a real cap table. Yeah, that's important. So I would argue as well, if you are thinking about it, don't rush it. Take your time. And another reason to launch a token, being on the bullish side of things, is it's damn cool. It's something good to do with your life. And as well, think about the big game here. If you can make it work, you can make a lot of other people as well richer in that sense. And a lot of people from, I would say, poor countries, rich countries, however you want to phrase it, but just people anywhere, everywhere. If you're giving them a vehicle that actually helps them and brings them up out of poverty at a certain degree, that's fantastic. Now, the flip side to that is that the money that's going to them, it's coming from someone else's pocket. That's just how it is. So there's always winners and losers. But at the end of the day, if you can make someone's life better, and the guy who lost money, it's not the end of the world, I think that's fair game. And I think it's a great way to, first of all, be a bit innovative, try to do something cool, because as well, don't forget the whole company that's backing, that the token belongs to, the goal in my view is to try and always bring value to the world in some sense. Like when you're on your deathbed, could be 50, 90, 70, whenever that would be, the last thing you want is the ghosts of what you could have been to come at you and say, look, well, I told you you could have done this, you could have done that, and then you didn't listen to us. I think that's Eric Thomas who said that, if I'm not mistaken. So I'm not going to take credit for it, but I think it's really well put. And at the end of the day, yeah, we only got one life. So if you think you can try and do something good, the best way to propagate it is to go international. A token is one of the best ways to go international straight away.
Got it. That's really great. So you mentioned utilities are quite of time. So what are the different kinds of utilities that can be actually attached to a token? Like I know a few that, like, it can be used in the project ecosystem for paying a fee, or uh, give providing insurance or other kind of utilities according to the project. But what can be some real life utilities that can be associated to it without having a project or product backing a token? So if you could answer that.
Sure thing. So, for example, if you have just a token but no real product behind it, what could be the utility of a token? Yeah.
Right.
That's going to be a tough one, dude. I'm not going to lie. If you literally have nothing on the back end but you've got a token, in short, that's where you go down the meme side of things, in my view. And just try and make a cool trend, try and surf on a cool trend, try and do something good like that. So utility wise, it can be whatever. Maybe if you've got some connections at big conferences, big events, maybe you could convince them, say, look, can people pay with my token? That could be one as well. You don't have to have a particular product on the back end, even though if it will make it 99 times easier. But this way you can be super creative as well. And I think it all depends on your network at that stage, on what you can actually make possible. For example, if there's a project where they've got no product, but it's just a universal token that can actually be used absolutely anywhere, and I think that's where Bitcoin comes into play. And there is no product on the back end. There is nothing. It's just that universal coin that can, in theory, be used absolutely anywhere. So I think that is the ultimate goal. And I think the question you just brought up is probably one of the most important because Bitcoin defines that absolutely perfectly.
So I have one question. When we talk about universal currency, like let's say Bitcoin, when we talk, we can use universally. And I've seen a lot of crypto advocates talking about that crypto is inflation free. It's not gonna get inflated. But what I feel in the economy is it's more of like very relative because in economy, it's not just a money or a value of, let's say in previous time we had gold or silver that mattered. But what I feel is it's more of like the things that we are trying to buy. Like for example, it's very relative. For example, if I live in a locality where wheat or other plant-based food is grown very easily, and let's say you live in a place where it's more of a poultry-based diet, it's not like plant-based. So if I want to have that poultry-based, I'll have to pay more to like pay off the other vehicles or services that will get included into these steps. Like let's say transportation, preservation of that meat, and same goes the other way around. But like let's say there is always trade deficit and like in within countries. So when we talk about in that way, like prices usually change a lot. For example, in India, I might be able to get wheat for $1 a kg, and in the same time when you buy it in the US, it's more of like $5 or $6 a kg. Now, when I want to pay it through Bitcoin in India, moreover, the thing is until unless Bitcoin is universally accepted by each and everyone and it becomes a global tender for the currency, it's more of like I do not want one Bitcoin as my payment, considering one Bitcoin is $1 at the moment. So I, for in India, you in order in India, if you want to buy that weed, you just need to pay me one Bitcoin. But at the same time, when you want to buy it in your place, you'll have to pay 5 Bitcoins for that. So now again, like there is when we talk about this, it's more of like arbitrage getting created between those two Bitcoins, right? Like one Bitcoin is worth 1 kg of wheat, another Bitcoin is worth of 1 kg of wheat, but it's more of like 5 Bitcoin to 1 Bitcoin. That's where the currency differences comes into picture. And that's why like we have Forex, which plays a very big play into the market and centralized banks keep on like regulating that. So when we talk about global currency, how do you think we can make it universally acceptable, and what could be the ways to make it acceptable? Because till the time being we keep on uh, like comparing it with the dollars or INR or whatever currencies what we want to do, it poses as an asset. It's not like an actual currency, because if I talk about dollar is just a currency for the people living in the US. For people living in other countries, it might be looked up as an asset, but for the people living in US, it's just currency. Similar, same thing goes into for me. But when we talk about Bitcoin, Bitcoin is an asset for everyone because we are comparing it to the dollars, and that is the reason we are saying that Bitcoin is getting so higher in price and it's gonna get very difficult to buy, because at the end of the day we are comparing it with dollars. But if it's like the general people or the crypto advocates who keep on talking about that Bitcoin does not has inflation, it will beat all of that, it won't be possible, right? Because in that way, like I won't be able to accumulate a Bitcoin throughout my life because of the price that's gonna reach within some time. And again, the supply side is also limited. So how can that be managed? Like I really have this question for a very long time, which I'm trying to find an answer to. Because whenever I talk to someone into the blockchain space, they talk about crypto or Bitcoin this, Bitcoin that, another crypto this, that. But after a certain period of time, when I talk about the real utility of these kind of scenarios, it's more of like they don't understand economics that well. It's more of like they are just banging the doors with the tech. But when we talk about financial part, the economics also need to be maintained. And that's where you mentioned that tokenomics comes into picture. So how do we bring that? If you can explain it to the users in a simplified manner and to me as well.
That's a toughie again. I mean, the simplified manner. I'll try my best, Ashmeet. Um, so first segment about inflation. Second segment about how do we make Bitcoin or any cryptocurrency actually global. The big problem with inflation for governments is ensure that they can print dollars. So let's say you've got $100 each dollar is worth one potato. All of a sudden, the government comes in and prints another $100. The guy who's selling the potato, he's not going to say, okay, well, it's the same price. He's going to say, I want more dollars. So he's just going to put it up, because the whole supply chain on the back end as well, everything goes up at a certain point. So in short, that's inflation. And I think it's one of the most harshest indirect taxes any country can place on the citizens. Because at the end of the day, it's a tax. You got to pay more for whatever that be, and it goes back into the boxes of the government. Now, from an inflationary perspective as well, you were comparing it, let's say, wheat or potatoes or anything. Everything's been more expensive, especially since COVID. I think it's been completely cross-border, spanning all continents, all countries. It wouldn't surprise me. The big thing here is that the prices of commodities have gone up. Why have the price of commodities gone up? Of course, inflation, but then the trade, the price of containers, all these different things. So if one little thing goes up at the very beginning of the food chain, or let's say the supply chain, let's say that all of a sudden the metal costs more money because there are less people working because of COVID. So they've got to pay them more the price where they are, they've got to get more guys in who they've got to pay more. They've got to sell that little chunk of metal more for more money as well. So then they've got to make sure that they sell it back. So the guy who buys it now, he's got to sell his thing for more money. And it kind of accumulates and spreads. So that's probably one of the best ways to put inflation for what's going on alongside the printing of money from governments. Now, Bitcoin, of course, is bloody expensive today. It's about $62,000, something like that, and that's like US dollars. When you brought up the point, well, if it is this kind of golden currency that everyone will be able to use, anti-inflation, all these things, how come it's so damn expensive? Well, this is where I don't think it's going to bring more people out of poverty now to a certain degree, purely because I think we've maybe got another 10, 20x to go with Bitcoin easy in our lifetime. I think maybe the next 10 years it should like a 20x. And that's just my own humble personal view. So if every single bank on the planet, or even like 10% of them, they just put 1% of the balance sheets in Bitcoin just to have a little supply, boom, automatically the price goes up. Offer and demand, simple economics. Now, what's going on with Bitcoin in short is it's already gone past that peak where a lot of people did cash out. A lot of people made a tremendous amount of money. If you bought Bitcoin back in 2012, 2013, and you sell it today, you're a very, very happy chappy. And it's made a lot of happy chappies as well who've kind of done this. But for the average Joe who's, let's say in a normal country, even on a pretty damn good salary, he can't spend 62 grand on a Bitcoin hoping that it'll go up, especially people like in our age in that sense, where you're thinking about different things, maybe buy a house or family, all these things that people are just wondering about in the normal day-to-day lives. So why the hell would I spend $60,000 when a lot of people don't have it in the first place on something that a lot of people think it doesn't really exist? It's just data basically, and it's highly volatile. At the end of the day, like I said, we've probably got a 10 to 20x easy in the next 10 years on Bitcoin. So it's the long run. Now, it's not going to provide, well, let's say it's not going to make everybody a millionaire now, that's for sure. However, if every single government switches tomorrow and uses Bitcoin as the sovereign currency, you can't print anymore. It's done. So let's say if you had, I don't know, let's say your last paycheck, I don't know, it was like $2,000, $3,000, whatever it be, 10,000, whatever you want. Let's say $2,000, keep it simple, okay? The last paycheck was $2,000. Let's say 5 years ago, your paycheck was $2,000 as well. If that initial $2,000 from a paycheck 5 years ago you kept in your bank account, your purchasing power would be far less because of all the money they printed. We're going back to the one potato, $1 concept again. If it's in Bitcoin, for example, they can't print more. So that $2,000 worth of Bitcoin that you would have been paid 5 years ago would still have probably the same value, if not higher. Now, will governments do that? I sincerely doubt it because they lose control, especially banks, all these different things. But do I think that Bitcoin will play a major part in, I would say, financial freedom going international to bounce to your kind of second segment here? I think it will, because it's the most open source, transparent form of transactions you can have. And it's no longer considered a scam by countries. They kind of get it now. They know there's something there, probably because they saw all the money in the industry, like, what the hell is going on? That may be one point. On top of that, I think a lot of them are feeling, damn, if we don't get this thing sussed out shortly, we will have a serious problem. Because if all the other countries start bulking up in Bitcoin and that becomes the national reserve instead of gold, for example, or they both go hand in hand, it's whoever's got the most gold and Bitcoin, or whoever's got the most Bitcoin, who all of a sudden kind of dictate.
That's insightful. Like, I have a few more questions onto that, like just a follow up. So, I got the answer. Like, I got this understanding of printing more money by the government reduces the purchasing power of the person. But what about the other market factors that actually plays, like example, transportation or any kind of stuff that goes into producing a thing, right? And I completely agree to the point that governments won't be agreeing to a universal currency because of the simple reason because of the way currently our markets or economies are calculated. Because if I talk about India, India's goal was to become $5 trillion economy. So when we talk about $5 trillion economy, like that amount of money needs to be printed. I believe it's not just some random number that we think, okay, now this thing must be priced at $5 billion, but there must be some $5 billion floating here and there in within the banks or some value being created around that. But at the same time, I don't think that can be done with any crypto because of the same reason we have these forex exchanges and market powers playing while taking place. So, do you think is there any way to make it global while having normal day-to-day transactions with another countries? Because, like, let me just explain my question to you in a with the help of an example. So, I'm a marketer, right? I offer my marketing services to people in India, and I offer my same marketing services to people in the US. So, when I talk about offering my services in the US, in the India, like let's say, I price my services at $200 a month, like that's a retainer. But the moment I go into US, my services are 400, $500 a month. It's almost twice because of the like US has the power to pay me that much amount and India doesn't have that amount. And again, the market flip forces like my competitors are willing to do it at a lesser price, same at the US. But now if there is this Bitcoin and I price it through a global currency, I can't ask for two different amount of Bitcoins because Bitcoin is same, right? Like if I buy a Bitcoin in India, if I buy a Bitcoin in US, one Bitcoin in India is equals to one Bitcoin in US. Now, how do I price my services? Like, how do I make that? Because now I can't say that I'll take $100 in India and $200 in US. So, because my pricing gets way too different and it's more of like two different currencies getting into place. So, how do we like balance that out? So that's my real question.
That's a good question again. And I think it depends on what you compare the Bitcoin to, because when you're speaking about something, let's say the asset that you're selling your services for, you could sell your services for gold. You could say, well, my service is worth 1 ounce of gold per hour, for example. So it depends on the choice of the asset you're willing to sell or exchange your services for. Now, currently we do it in dollars because the international currency. We'll see how long that lasts. I hope it does for the sake of all of us, but we'll see. Um, Now, on the other side, if let's say all of a sudden you priced in Bitcoin, back in the days, people did this as well. Like people would accept one Bitcoin, or you could pay in Bitcoin, different things like that. Now, today, Bitcoin, we say, well, give me $20 worth of Bitcoin, $1,000 worth of Bitcoin, $50,000 worth of Bitcoin. So the comparison to the percentage or quantity of Bitcoin that you send is compared to the dollar value as well. So in my view, it's just a pretty straightforward, well, I also accept payments in Bitcoin or USDT. Um, just send me $400 a Bitcoin or 450 or 200, depending on where you are. But at a certain point, depending on how far the price of Bitcoin gets pushed and how dominant the US dollar remains as well, there may be a slippage and there may be a change of wind also, where instead of speaking for the national international currency, where it would be the USD, the US dollar, maybe that will change. So it's always going to be something in comparison because I don't think Bitcoin will become the legal international tender for everybody because governments will despise it, banks will despise it. There's no way they're going to let that happen. I think they'll allow it to be a value refuge or a refuge of value purely because of the it's too late for them and it's so decentralized you can't stop it. So now they have to buy as much as possible so they kind of control the game. but I don't think they'll allow it to free flow and to replace the sovereign currencies. El Salvador is quite an interesting one as well, where I think they definitely did make a very wise decision. Um, we'll see in the future, but Bitcoin long term is going to go up. I don't think that you should bet, and this is just kind of to expand a bit on your initial question. If you are accepting payments in these things as well, you need to make sure that you can, if you need that liquidity, you know how to exit the liquidity, different things like that. And I think long term, like I said, Bitcoin, people will trade it. They will sell their services for $10,000 worth of Bitcoin, different things like that. But there will still always be that comparison asset, so people know what on earth you're talking about.
Right, perfect. So basically, we need we need centralized currencies are here to stay.
And yeah, listen, it could be. I don't think we need centralized currencies. It's just what we have, and I don't think that's ever going to change. But we need an asset to compare the quantity of Bitcoin you're sending it to. So if we're speaking Satoshis, that's going to take a very long time, you know? That's going to be a tough one. But if we're speaking something, it's like the metric system, or like in centimeters before it was, inches, different things like that. The metric system evolved. So my grandparents, I remember they were speaking in like inches and feet. But if you went to buy a piece of wood to redecorate whatever you want, you say, well, I'd like 10 feet of wood, please, plus 2 spare inches. Like, what the hell? Please, how many meters is that? Because the metric system changed to agree. Then we got kilometers and miles as well. I live in France. We speak in kilometers. Literally everywhere else in the world, we speak in miles. So it all depends on which countries you're dealing with as well. And even if we're going deep into that, we have those problems even today for other metrical systems. I would classify them as such. For example, if you need to unscrew a screw, you have the unique ones if it's made in the States, where they've got you need a unique screwdriver head because it's not the same dimensional form as the ones in Europe. Same as phones, like one plug doesn't work for all of them. So I think it's always going to be this big plethora, a myriad of different adaptabilities to different things. But at the end of the day, people get used to comparing and switching assets of comparison. So I think it's just going to be a natural, fluid roll into something else.
Got it. Perfect. Yeah, that really helped me answer a lot of my doubts that I actually had, and that really helped me. And I believe we are almost at the end of this podcast, and I have just last two questions for you. And one is something I believe everyone who's listening here would want to know, and that is like, how do we launch a token that I LEDX on its investment, and we all can become millionaires? But like, let's say if anybody wants to launch, like, what are the I won't say what are the methods because that's really difficult to answer. But like, while you've been advising a lot of projects, what are the few common factors that you have found out in the projects that actually like multiplies users' money or like the investors' money into like multiple X's? I don't want to talk about 100,000 X's, but like it actually multiplies. So, what are the common factors?
Of course. So on top of buying my book on how to actually launch a token, which 12 chapters, 200 pages, where it goes into all these details, if I got to sum it up, specific patterns, first of all, I would say the main thing is you need a cap table. Regardless of the product, regardless what it is, you need a cap table. Now, a cap table, it's what investors have invested in you, in your project. Like, that's the main thing. If you remember that woman, I think it was Elizabeth Holmes, if I'm not mistaken, where she raised like, I think it was hundreds of millions, if not maybe billions of dollars for a medical product that she didn't even have. But because she had such a big cap table, such big investors already in, all the other ones hopped in as well. So what's really bizarre in this industry is that projects still do, it's much harder than back in the days, but projects still can and do raise very big amounts of money by solely having very big investors on the cap table. Even if they placed $100,000 or even $50, you can say, look, they invested in me. If you get Sequoia or A16Z on your cap table to start with, that's heavy. That is good. And what does that mean as well? That the retail community is like, damn, these guys are big. This is going to be big. All of a sudden, that's probably one of the biggest things you could have. The bigger, the better your cap table, the easier everything will be. And the best way to build a cap table, You got to spend some cash, but you got to go in the places where these guys do as well, become friends with them, speak with them, boom, and then bring it slowly to the table. If the guy likes A16Z is your best friend, but you've got the terrible product, to help you out, he'll just say, yeah, you can use our brand name. That's how everything works. It's about the network. So if you're able, even if you've got no network, it'll take some time to build it, but that's the main thing. Because even if you think, no, it's fine, we'll build it, or we'll try to, then we'll try a fundraise at the same time, get some angels, you're going to still waste maybe a year or two easy trying to find this. So I would argue maybe try and find a little sponsors so you can go to all the events, different things like that, and meet with the guys. Pay them a few drinks, get along with them, have a few drinks together, have a good time together. That's the main thing. They need to like you. Once they like you, get them on your cap table. You need one big guy to start with. The bigger your first one is, the easier all the other ones will be. Even if you don't know them, you can ask for introductions from people in the industry, different things, maybe an accelerator, whatever you want. And then they will be able to place or at least make introductions to other very big tier 1 VCs. So your cap table is done. Once you have your cap table, the next big thing, I would argue, it's going to be, I mean, of course, marketing, different things like that, but you need a budget. So if you've got cap table, you've got a bit of money as well. But of course, you need for it to be successful, you need a very big centralized exchange. Why centralized? Because that's where you have the most volume, the most liquidity, put it that way. And the very interesting thing here is that it's all centralized, of course, which means that you can actually do marketing within that particular community. If you go on a big DEX, for example, how on earth can you market to the community on the like? You can't. It's that simple. If you get on Binance, they've got the most users, and I think most liquidity by far. You can target, you can get on the banners, all these things. So those millions and millions and millions of users, they'll see you. So I think that's one of the most important things as well. And that cost-wise is where you need a good cap table and to get money in. Then you would also need, I mean, a good team. It's something I didn't mention, but a good team as well. If you've got, let's say the ex-head, if you've got Elon Musk in your team, you know it's going to be big just because of his name, for an example, okay? Now, I highly doubt you'll get Elon Musk, but you never know. But the bigger the team, individuals you can get on board, the bigger they are, the easier everything will be as well. And the team, if they've got previous track records, it'll make everything easier. Now, centralized exchange-wise, so that you need as big as possible, but you've got to hit certain metrics, and this we need marketing for as well. For example, Bybit, in today's market, you need about 80,000 followers on Twitter, and about a 5% engagement ratio is a minimum. Discord, even bigger engagement ratios, but smaller followers. So to hit those metrics, even if you know them, they like you, you still got to hit the metrics. If not, they can't let you in. So you need a very good marketing team as well. Now, there's a lot of bad marketing agencies in this industry. I won't name names, but there are like 95% of them are shit. I don't know if I'm allowed to say that word, but sorry. But they are. 95% of them are absolutely terrible. Then you need a good market maker, let's say a normal market maker. Again, 95% of them, they're absolutely terrible and probably worse than marketing agencies because they will scam you. They will literally do a loan model, different things like that, and they will liquidate a lot of tokens to make money for themselves, and you have no idea what they're doing. They can crash your projects. Like I said at the beginning, the guy from Gotbed, CLS Global as well, they're all caught in this big thing because of wash trading, different things like that. So a lot of people do it, but again, even if you have a stellar cap table, stellar team, stellar exchange, if when you launch the market maker decides to do something a bit funny, that can crash the whole thing. So you need a normal market maker on a retainer model. Never go for loan models. It will bite you back. If you need liquidity, that's where you need to go back to the very start and rethink everything. That's why it's very important roadmap-wise. And I may have forgotten one or two things, but these are the main things that come out. Of course, like I said, in my book, I've got 12 chapters, 200 pages explaining how to do these things. But off the top of my head, if you can nail these couple of points, you've done pretty damn good. Now, of course, community as well. One main thing, last point on this, I know we're going over time a bit, so sorry, but it's a good community. So it's buying pressure. If you bought your Twitter, if you bought all the other things, you won't have anybody to buy at the end of the day, even if you do marketing, different things like that. So Botting can help a little bit just to kind of pick up initial traction. Why not? Maybe a little bit if you need. Maybe like a couple of thousand people, just so when new people funnel in, they don't feel alone. So that's a strategic use, but you're not betting on them to buy. So you need a very solid, engaged community. This is the main thing as well. And this is where you need to give your community a win. You need to give the retailer a win. You can't be too greedy. This is something I don't say it. You cannot be too greedy. Don't think that, cool, Stellar team, we're getting on Bybit or we're getting on KuCoin, OKX, Binance, whatever. We've got Wintermute as the market maker or G20, Enflux, whatever that would be. We've got a huge cap table. We've got 100,000 people on Twitter, or even 200 or 500,000. As soon as we launch, even the tokenomics, everything else as well, as soon as we launch, we're going to liquidate. Be very careful with that, because the first couple of, I would argue, minutes of when you launch, how that chart kind of fulfills, it will determine the rest of the hours, then the rest of the day. Like the day you launch, it's probably the most important day you'll have, because even if you spent 20 years working on a product, working on the token, everything can be messed up that day. Even the market maker could be late. That's happened. Like guys, they raised millions of dollars, huge everything, and they went live. No market maker. He forgot to activate the script. Came and said, "Oh, really sorry about that, guys. Super, you just lost $200,000, and the chart was a little bit iffy. No clean, like no spread is really not nice. So make sure that you've got everything that is normal from the market maker side. That's the main thing. And don't dump on the retail. Let them have a win as well. Go easy, liquidate a little bit, keep it easy, keep it flowing, and make sure that the retail feel like they have a win as well. If you dump straight away, if you try to when you try to liquidate, the retail, they're the exit liquidity, they will lose money. If you give them a little bit of money, they make it back, they're going to put even more money in next time, bring the friends on board, all these different things. And that's when you can start to accelerate liquidations depending on your vesting schedules, etc. But be very gentle and give them a win,
Perfect. I'm really thankful for you to giving me a win, because this podcast was really awesome for me. And I had lots of insights through this. So thank you so much for joining in.